We are live. We've been live for
Hey.
4 seconds, 5 seconds. Holy crap. All right, let's see if we can get anything off the thing here. Are we seeing anything pop up?
Let's see. Yeah, there we go. We have a live.
All right, cool. See if you can post that. I'm gonna actually add. I forgot that we have cool background music nowadays. I'm gonna put that down to really low for us.
Nice.
But I can't remember which one we were playing last time. Maybe this one, something like that. All right, let's see. Okay, let's see. Anyway, how are you doing, Rob? We haven't talked all day.
Yeah, I'm doing splendid. Yeah, not done much today. Sleep, gym, and
Sleep and gym.
there we are. Sleep, yeah, sleep and gym. Good day.
Hey, that's nice. Yeah, I've been trying to.
What about you? Yeah, go on.
It's been so cold today in Sweden. Like well, you remember how I told you how expensive the electricity bills are getting now?
Yeah.
Yeah, and I've been trying to figure out ways to save energy, I guess.
And what solutions have you come up with?
None.
When does your Bitcoin mining heater arrive?
Yeah, right. Exactly. I wish. I've actually I've been trying to figure out like what would it cost to go solar, but it's winter, so it doesn't do anything. But I did some research, and apparently in Sweden you can get solar roofs for the summer and all that, and then any excess energy that you get, you kind of sell that. You sell that to the energy company, and then they sell it to other countries. And so I'm able to save like credit on on my account basically for the electricity delivery, which means that the winter is basically going to be free depending on how much you've sold. So I'm like, either you do that or you start up a Bitcoin miner at home, right?
I'm feeling the Bitcoin miner.
Yeah, even if that's not as good, it's still much cooler, right?
Yeah, for sure. Like it's obviously you've got to think: is it actually economical? Is it more expensive to run than an actual heater? But yeah, it's cooler, isn't it?
I don't know, but actually, a topic that we could start off with here, is that the current miners, the S19s, I can't remember all the names of them, but like the most expensive ones that normally cost like $20,000 or $18,000 for one miner. They're down.
They don't cost that much anymore.
No, I've heard. I haven't double checked this actually, but if anyone's watching thinking about buying a miner, now is the time, because it's literally like $1,500 for an S19 right now, which is ridiculous. I mean, if you bought a bunch now, even if you don't want to sell them, or if you don't want to use them now, you hold on to them, right? Yeah. And then you can turn them on when it's profitable again, because you look at how much your energy costs, and then you see when you get profitable, you need to what the prices need to be.
So about $1,600 or so they're going for.
Yeah, it's insane.
Sold for much less. Yeah, 800,
500. Let me open your stream there. Yeah, okay, that is crazy. But those are bids, right?
No, these are sold prices.
What? And those are S19. Are those the S19?
I've just typed in Bitcoin miner S19, so that's
yeah. There are some new ones that are like hydro miners, where it's like you basically put them in oil, or whatever. Or no, wait. Actually, the hydro ones are the one that's cooled with water, like a PC. But there are other ones that you like submerge in like oils and stuff.
Yeah,
which is
but
kind of
if
crazy.
you want, if you want the heat out of them, then you just stick them under your desk, and they'll produce heat for sure.
Yeah, I mean, for me, if it wasn't, I mean, maybe it would be cheaper to heat up your house with a Bitcoin miner in each room.
I'm not sure about cheaper, but at least you'd be getting something out of it. That's it. This isn't. I don't think this is advice on how to keep your house warm in winter if you're struggling to get by. I don't think this is the best solution for you.
No, I
It's
don't.
somewhat of a novelty solution.
Yeah, I wouldn't say that it's.
I'll tell you what though, that look, you can see how much the prices have dropped even within the last month. That they're selling under £1,000 now.
Yeah,
A lot more was selling over 2,000 a couple of months ago. So the squeeze is definitely on.
Oh yeah.
If you had the money to start up mining now, if you had cheap electricity access, then there's definitely an option.
Yeah, I mean, I'm tempted. I'm not gonna lie. Even if you don't want to use them, buy them now and sell them later, right? When it's profitable again, like you could flip them. It's like watches, kind of. You know.
Okay, but that's then the case. Is can you pick the bottom? I don't think that you can pick the bottom. The prices could carry on going down if this winter there's going to be for sure a shortage of energy. So something that consumes energy is not going to be profitable and the more the energy prices go up, the less profitable these things become, and the less money people have to buy them.
Yeah, still, it's like we've seen. If you think about it, we've seen the hash rate going up, right? Even though because I actually had a look up over that actually. It's like when you have this happening, all the previous all the companies, they ordered a whole bunch of miners, right? And that was months and months ago, and now they are coming online. Like the past 2 months, they've been starting to come online. So you see the growth of the hash rate, right? And if I don't remember if I have that open on.
I've got the hash rate up. Here you go.
Yeah, let me have a look for Bitcoin. Yeah, so you've literally seen it go up, right?
Yeah, it took a little bit of a dip recently, the last week or so, but now it has climbed back up. So and we did see that behavior somewhat in 2018, where yes, there was a big drop coming into the capitulation bottom, but even it was more into 2019, 2020. This hash rate was just building, even as the market was stagnant for a year from June 2019 to towards the end of 2020. But hash rate continually made higher highs in that time.
Yeah, let's see. I found it here. There we go. Oh, I'm on Glassnode. So yeah, you've seen let me actually make this a bit smaller. This is all time. Let's go from like 2020. So we saw I remember this dip here. I don't know if you can see my screen right now. You should be able to.
Yeah.
But I remember we had the China ban here, right? I believe that's what it was.
Yes.
So we had a big dump,
and then migration of hash rate.
Yeah, and you see this bear market, we've still seen an ongoing like hash rate going up.
Yeah,
and I believe
it's a bullish divergence at the end of the day.
Oh yeah,
it's a.
And I can see this. We don't have this information of the hash rate from it hasn't come out yet. From November 10th onwards, we haven't seen anything, but that should be updated soon, I hope. But either way, like I think it will start going down here because now
there was a drop and then it's rallied back up.
Right. Yeah. No, so I can definitely see if the hash rate keeps going up like this, even though the price is down. Imagine what happens with the miners when it's time to kind of get them, right? When people want to get them again, when it's profitable.
Yeah, well, it's you're making that decision. Is it financially worth it compared to buying and holding the Bitcoin?
I mean, and look at the difficulty.
is it better to invest in gold miners or buy physical gold? It's the same question.
Yeah, exactly.
Yeah. And have we had it? My kind of feeling is we need a bit of a miner capitulation to kind of the miners seem to be the last source of leverage in the system, and if they, that's a motivation to continue to squeeze them, and I wouldn't be surprised to see those miners get squeezed. 20 to 30% hash rate drop.
Yeah, I mean, if we see something like this, like the China ban thing, so it comes back.
Yeah, that kind of move.
It should come back down to where the price is, so it's not. I mean, yeah. Either way, the miners right now, the ASIC miners are cheap as heck. So I'm personally tempted buying one. Just the one.
Yeah.
Right, because if I started 2 miners and 3 miners, my electricity bill right now, my electricity bill is like $60 a day in Sweden right now. Just heating the house, $60 a day, dude.
Gotta get those jumpers on, get those blankets.
Yeah. Dude, I got double. I got Chewbacca on this one, and then I got the thicker one. It's nice. Not actually. It's funny with the basement here, because I built this office in the studio in the basement for a reason. It's always 15 degrees down here, Celsius, always. Okay. So it's perfect. So it doesn't matter.
That's quite cold.
No, not really. I'm fine with it, because I sit down here, right next to the computer, which gives me a lot of heat. I got a light right in my face, which is not warm, but it makes it feel a little bit hotter. Yeah. And I can see that L750 is here. Hello, I see Splotchy is here. Sup, dude?
Yo. So I'm just looking up here at an S19. I'm not sure what electricity costs are per kilowatt hour for you. Do you know them?
Per kilowatt hour? Yeah. It's, you will not believe this. I can actually prove it to you, and I'm going to, because I'm going to hop over to this thing here. So this is so this is the prognosis for tomorrow.
Yeah.
Let's see if I can find this. Come on, camera, wake up.
There you go.
That's the prognosis at the peak, and that's about 46. 75 cents. 75 cents.
That's a lot. But for how many kilowatt hours though? Do you know what the actual cost per unit of power is?
Well, currently, it's 75 cents per kilowatt hour.
Is that what it is? Right. Okay.
Yes.
Oof. Right.
And
to run an
S19,
to run an S19 would cost you $1,500 per month.
Yes. With my electricity.
No. That would be your loss. So that you would have to be getting $1,500 worth of value in heating out of that miner for it to be worthwhile. So I don't think so.
On the 8th of December, you can barely see it here, but on the 8th of December, this is one day, and I used 109 kilowatt hours.
Okay, right, yeah.
That's about $60. And they say on Wednesday it will go up to $1 per kilowatt hour. So so I'm not going to start mining. Let's get that clear. I'm not going to start mining.
The break-even price on an S19 is about $25 per month. Is about $25 per month. Loss is 10 cents per kilowatt hour. That's the break-even price.
Yep.
10. That's not a lot.
So I'm probably not doing that then.
No.
No, but then as an investment, as buying the physical ASIC miner and then selling it off later when it starts getting profitable for most people.
Just buy the Bitcoin.
I'm not very much interested. Maybe Crypto Talks can start a mining pool though. Who knows? Either way. So I did want to talk to you actually about some stuff here. We do. I was looking. We were talking earlier this week, I think, about when we did the last episode on was it Monday? Something.
Yeah.
And I wanted to bring this up again. We had the Fibonacci levels there all the time. And what I wanted to show you was something that I kind of didn't think about that much, but because we anchored the Fibonacci down here at the when the COVID happened, right?
Yeah.
At the weekly close. These are weekly candles, right? So we anchored it there, and then we anchored it at the weekly close up here at the peak. If you would have done that, the first thing that popped out in my mind was we have this whole Fibonacci level up here. We came down and we wick below that 3 times or 4 times. If you're really looking at it, it's 4 times. Right? And then we go up and we create this trend line. We pull that trend line down now after we created this one. Up here we had something happen, right? We had
there's the Celsius FTX, well, Celsius 3AC Luna.
Yes. I'm gonna do a call out here and just do this.
Well, it was Luna collapse, wasn't it? Luna was first.
Yeah, Luna was
first. Else followed.
Luna collapse. We have that there. So, and then we created this. From there, we could create this line here. Then we dipped under the Fibonacci level, and we basically went through it completely because we had something happen here as well, right? And that was
Celsius and 3AC.
Yeah, exactly. So we're gonna pump this out again.
3 Arrows Capital.
Yeah, so it was 3AC, Celsius, and
Voyager went as well, didn't they?
Well, Voyager.
But
let's keep it at that. That's enough. It's enough.
Yeah,
we just need some info just to see what's happening here. So we wicked down below this, the Fibonacci level, right? We came up, we created this trend line, the long term that's still valid. We went down here, we had an extra crash, otherwise we might have moved sideways for a while, right? And then we wicked below the next fib level, right? It's just wicks.
Yeah. Still held it multiple times.
Yeah, exactly. And this is what I really kind of jumped out in my face here. So
and we got resistance on the one above, yeah?
Yes. And we also had, I almost forgot, over here we had the war in Ukraine started here.
Yeah.
Right here. We don't need to add that though, because nothing really happened with it, but it's kept everybody kind of pushed down, right? And it's kind of being careful about things.
It was a reason for funds to de-risk from more risky into less risky assets. Simple as that.
Oh, so I'm putting that there, and then we came down here, and then we have the fib level holding, and that fib level was at below 20K. People said, I remember it. Oh, nothing's gonna go below 20K. It's no way. It's gonna hold up to. It's gonna hold up to this and all that. And I believe you told me, and you said, you said that. You said, why? What would that matter? I'm like, okay. So we had a bounce. Right?
It's a support level, but those support levels can break.
Right, but we came down. We used the fib level as a cushion, right? Bounced back up, and we hit the fib level, the top fib level. Then we came down, hit the fib level again, and then here we had FTX, right?
Yeah.
So FTX. So looking at this, it kind of tells me the fib levels here are extremely well placed because you have a wick below it. You have this, it's a collapse, so we can't really control that. But then right here, it starts getting obvious that the fib levels are strong. So we have another line that we pulled, right? And it was from here, and we anchored it on this one. This one here.
Yeah.
And it kind of pulls through, right?
It was on the linear chart, wasn't it? Does it show up better there?
No, it shows up on the log scale too. So
I think it's
we
just
have anchoring, anchor, double anchor here, anchor again. So when this happened, we had two levels that met. So there's 2 resistance lines that met. And if we add the Bollinger Bands, I don't remember if it was there. No, it wasn't. But I'm going to keep the Bollinger Bands on here for a second. I'm just going to give you my thoughts on this, and I'll see what you have to say about it. And you remember me in the past episode, I was talking about having a range, right? And the range was somewhere around this, right?
Yeah.
And that correlates to these two fib levels. And you add the golden pocket for wicks. So the wicks right here would be kind of where the golden pocket is on after each fib level, right? And the same thing here, right? So if I'm looking at this, and I'm actually going to pull another shorter term line here as well. So here's what I'm thinking right now, and tell me what you think about this. This is a weekly candle chart, right? Come down here, we're in the middle of the fib levels. We haven't come down here yet. If this line doesn't hold, or if this resistance line holds, we will go down and we will wick down to this golden pocket. If it goes through, we're going to have a problem because this trend line is going to be resistance, and it's going to meet with this fib level, and the Bollinger Band middle line will probably come around somewhere there too. So you have 3 resistance lines, which are fairly powerful because it's the weekly. We haven't really been above the weekly Bollinger Band middle line since the crash, right? So we got 3 really strong resistance lines that will meet up right around here if we go through this. So if we go through, I'm thinking we might go and see this thing happen again, right?
It's not unlikely. It's really not
for
unlikely.
For me, it's very likely that it will be stop right here, and then we go down, and that's me.
So potentially, I'd say there is, coming into the new year, there is some likelihood of a rally's overdue at some point, and if nothing bad happens, I think there's plenty of room to relief rally up.
Sure.
And maybe even start to just turn the tide a little bit. However, I kind of feel the market is only dropping these levels on big fundamental events. Mm-hmm. Typically, there is clear reaccumulation going on.
Oh yeah.
The amount of Bitcoin being bought, scooped up, eventually that sell pressure is exhausted, and there could be room for a sizable relief rally, like sooner rather than later. And it would be, it would be very typical Bitcoin that everybody finally capitulates at the bottom. Unless someone blows up, that capitulation's more than likely done. Now, is someone else going to blow up? I don't think anybody can say that further collapses are impossible or even unlikely at this point. We've seen it all throughout the year, leverage being flushed out of the system as those weaker players, those people that took too much risk and have drawn down too much, eventually can't pay what they owe out.
Yeah,
there's a lot of people out there that are still surely borrowing and have to repay at some point. And if the market can flush them out, they will.
Yeah.
Miners could well be that target of the last ones that are still borrowing to stay afloat, and if they can get flushed, they will get flushed.
Something that kind of gives me the chills here, and the reason to why I think we're going to see this happen before a rally is because if we rally up, it's going to be a very small one, because I don't think we're going to crack this line, the trend line. So, and secondly, we have so many things that can still fall because of FTX. Like we have, there's some issues. People don't trust exchanges first of all. I know that Binance and Crypto.com so far, at least, and Kraken, I believe, have come out and they've shown their liabilities now as well. With the auditors have actually released it, and it's Crypto.com and Binance, I believe, were the ones that I've seen. I know for sure Crypto.com.
And all
people were very much against it. I've used Crypto.com for quite some time. You know that. And you've used it too, because we use the card. We don't use the exchange. We use the card, right? And I like it. But Pinex, for example, which we both use, is connected to Binance, right? For liquidity. And they've already shown, I think, at least the reserves but I don't know if they have the liabilities added yet. I know that they added a section to their website, to the exchange, somewhere, where you could go in and see, you could see reserves, their reserves. But since they're connected to Binance, it's basically Binance, right? Either way, I'm looking at stuff like the GBTC fund. They still, the only thing they need to do is to go out and say, "Hey, we have the Bitcoin." That's it, and then you will close the gap between the.
Well, no, because there's been no expectation that they don't have the Bitcoin,
right,
until recently, and the gap has continued to grow and grow and grow and grow.
Yeah.
So and that is, I
We're
think
48%, I think.
GBTC, like, I know, I don't want to say it's something that is going to happen because nobody knows, but there are connected parties with BTC that are in a hole. It could very well be that a certain amount of GBTC ends up getting dumped, and that will create arbitrage in the market, because what you're going to see is GBTC is currently $8,000. You can buy essentially a Bitcoin for $8,000.
It's 8,750 or something like that.
8.03 I've got, so 8,030.
Well, that can't be right, because it's I think it's 48% off from a Bitcoin.
Well, it's a little bit more. It's more than that now.
Is it?
Yeah, that's what I mean.
When can you open that? Do you have that?
Yeah, I've got it up.
Okay, let me see.
8.03, and that's per contract, and each contract is 1,000th of a Bitcoin.
Oh, I think I must have looked at it earlier then.
And so you can see
that's crazy.
And so, if you get a sell-off, say GBTC ends up having to sell off their own market in order to raise capital for debts that they owe out, they could end up basically dropping their Bitcoin at the absolute bottom. There's at some point where people are going to say, right, at $5,000 a Bitcoin, I'm willing to take that chance. I'm going to sell my spot Bitcoin, and I'm going to buy GBTC with it at a 3-to-1. I'm going to triple my Bitcoin.
Yeah.
And that process would cause a massive drop in the price of Bitcoin.
Right.
If 50, 100,000 GBTC had to be sold, the arbitrage that would generate from the spot market would be gigantic.
Right. Yeah, I don't. That's kind of crazy. I mean, I personally, everybody who knows me knows I am not a risk-taking. I'm not a fan of taking big risks, and I feel like it's too risky. It's just too risky for me to say. I would rather own spot, put it in a cold storage wallet, and then be happy, right?
Yeah.
I don't.
So you have Bitcoin.
Let's say you sell it. Let's say you have a Bitcoin, right? And you sell that, right?
Mm-hmm.
And you go and you buy GBTC.
About, 2
right?
2 point
and,
something.
Okay, so you get 2 for 1 basically, right?
Yeah.
And then it ends up just being nothing, just poof, and then you have none. I'd rather have what I have and then leave it there. That's me.
The thing is that what they have. I know there were some online sleuths, basically people that were navigating the blockchain, that found the majority of Grayscale's GBTC now. They're fairly confident that they know which wallets are attached to them, and so they've essentially verified the majority of the Bitcoin. Now, is there any suggestion that they're the only wallets and there's not other ones they just haven't found? Unlikely. So the expectation is they are fully backed. I don't think there's any doubt of that, because they're a regulated product, don't forget. So to not back it, I'm pretty sure that's just straight up fraud. They're not going to be participating in that as a listed product.
I believe it's Coinbase holding their Bitcoin, as far as I know.
I think you're right.
I think they showed a wallet with was it 400,000, or the combined that they have shown so far is 400,000 Bitcoin or something?
I think that's their total Coinbase custody holdings.
Yeah, man, I would never agree to hold that much for anyone else.
But
Like, if you ask me, Phil, can you hold 1 Bitcoin for me? Can you hold this wallet? I'm like, I don't know.
Sailor's keeping his Bitcoin with them as well, so he's got 120K with them.
That's insane.
I think you've got to think, and that's why a lot of people, like retail people, bash on Coinbase because it's expensive and they've got Radiata, this issue, that issue. Go and use Binance instead. It's like, no, Coinbase's clientele is not really, they don't really care that you think that they're too expensive. There's a lot of people that use them for a reason.
I wonder if there's a, like, between the exchanges that exist, which ones are actually, because it's been a lot of talk about, the most trustworthy, and it's funny because you have the Bitcoiners, they say don't trust, verify, right? And I agree with that. I'd rather hold my stuff on my own. The only time I use an exchange is when I'm going to do a trade, and then when I'm done with the trade, I move it out, right? Security, right? And using the only exchange I use is Pionex. You know that, and I like it. But like I don't have any substantial amounts on there, right? It's like maybe 10%, and now I've moved most of it out, and then I've sold a bunch of stuff to invest in this, and it's like I think it's hard for people to know which ones to trust, but honestly, I think I'm kind of surprised that Kraken is not bigger than they are, because Jesse Powell, now that everything went down with FTX and everything, Jesse Powell has been, which is the founder of Kraken, I think is the founder.
Well, CEO, founder.
Yeah, but he's fantastic. Like he just says it as it is. He's not afraid to speak out. He's basically calling people out instantly on Twitter when people are BSing. Basically, I was in the Twitter space with Mario Narfall, right, when they had SBF, Sam Bankman Fraud, right? What was his name? Scam bankrupt fraud or something. Yeah, but when he was there, and basically during the live show, he was tweeting. He was also listening, so he was tweeting responses to everything that he was saying, and just calling me out on the BS throughout the whole thing. And it was noticed later on, after the space was over, by the hosts and everything, that oh crap, maybe we should have had Jesse Powell as a speaker here. But yeah, he's been around since Mt. Gox. He's been calling people out on shit. Like, Kraken is the only ones that I know have always been saying, if you go back to like when they started, I think they started in 2016, something.
Somewhere in that range.
But they've very much always been about security. Like, they even said, like, we don't want you guys we don't want to custody your stuff. Only have your trading amounts on our exchange, because for us, it just becomes liability, and that's all it is when they're custodying for people. And that's true, right? And they want to avoid that. So my first exchange that I started using was Kraken, but I kind of went through different ones and tried out different ones that I liked. And Kraken is the only app that I still have on my phone from all the ones that I've tried out. I don't like Binance. I don't have that application. I don't like Coinbase, so I don't have that. I have on my phone, I have Kraken, Crypto.com, but I don't exchange on that. That's just for my card. I got Pionex, and that's it, I think. So I don't know. Maybe I should start using Kraken again. It's there. It's my secondary. Like, if I can't buy if something's wrong with Pionex or whatever, I go to Kraken.
What I like with Kraken is being able to withdraw directly to your bank very easily. Like, it's a trustworthy way. You can trade into dollars, you can trade into pounds, you can trade into euros, and it's that's fiat currency. They actually do own that money. So it's that does give an extra layer of security that can't really be, or shouldn't be, overlooked. And I think all too often is overlooked. That I use Binance. I'm not gonna not Binance. I'm not going to say it's going to collapse overnight, or they don't have the reserves. They're one of the few that's really tried to go. Yeah, we do have it. Have they
they've been
been
open with that.
involved? Do I think that they've done everything by the book all the time, every time?
Hopefully,
Who's to say?
but
I hope so, but I would, given the given the general behavior of financial institutions in general, I'm not too optimistic. But that kind of goes for every single crypto exchange going.
right.
I'm nobody knows what they do, but if they do anything dodgy, well, traditional banks do dodgy stuff all the time, and we've seen FTX as a perfect example.
Yeah. But yes, I don't know. I've been a fan of Kraken, and especially I think it has a lot to do with Jesse Powell. I think he's I really like the guy. Like whenever he goes, I think he was on. I think he was on. What's it called? What Bitcoin did.
Yeah. I remember you showed me that one.
Yeah.
I haven't seen it yet, but
yeah, I showed you it and you didn't look.
Yeah. Oh, it's on the to watch list. It's on the watch later.
Yeah, and I see. Your microphone was weird. So
yeah, it was. I was on the webcam.
It's much louder now.
At some point, we'll get this right first time.
yeah. No, it's all right because the microphone from your camera was actually pretty good. That was why I didn't react to the quality.
Yeah,
I think technology is going forward. You could almost think people are trying to make things better.
All right, well, optimistic.
Yeah, so maybe we should jump back on this this thing here that I was talking about.
Yeah,
like there are a few scenarios, right? We have, breakdown at this line, come down, then we're definitely going to see this, in my opinion, or we go through and we crash even harder. Because, like I said, here's 3.
I honestly, I wouldn't be surprised to see a rally back up into the 20,000s and hit that top that upper yellow line.
Yeah, I wouldn't be surprised either. I'm just saying these 3 that are gonna come together here is going to be hard to get through at the current state of the market. Like if you think about the sentiment that people are not very much engaged at this point. And it's like you say, it's like, most sellers are probably exhausted. We're seeing this slow, like if I go to the daily, we're seeing these this really slow, and on the daily we are actually above the middle line on the Bollinger, which is not common. Like it doesn't really. We have
but then you look at what happened when we were last there. If you look at that one, was the last time we were above it, and all it took was an event. And
exactly. And this is what I mean.
These events tend to show up,
and this is what I mean. This area right here, from where we are right now, let's call it this area before we get to this. That is, let's see, we get it to it exactly the crossing. That's going to be on. Oh, dang. It's going to be on the 6th of January, let's say, if it's right there at the crossing, right?
Yeah.
But at that point, I mean, that's almost a month. It's 3 weeks.
So maybe we just have a very boring 3 weeks.
During those 3 weeks, we have all these these other shoes that might drop because of FTX, because it's just been FTX, and then we have it's things might happen. So we have a couple of weeks to wait and see, and then if something drops during this period when we're trying to move up to that range, I don't see that middle Bollinger Band holding. And Bollinger Band is not like the perfect indicator. It's just one indicator, but putting all these trend lines together, these are 2 fairly long-term trend lines, and this one is even longer, and this one is very long. The longer it goes, the more power it has, right? So yeah, I'm very careful here, and like I said, every time we've cracked through the Fibonacci levels right now, we had the crackdown under it, then we had this was really fast. This is what I'm expecting to see. This crack through, hold the middle, crack down.
But then this kind of the fact that we've the loss, that the percentage drop from FTX compared to 3AC and Luna, it was actually it's a relatively small drop, and that in itself is look at the size of FTX and how much has just been evaporated. Then it's kind of very impressive that we are where we are, and I think that's I think it's fair to say without FTX blowing up, we probably would be above that Fibonacci level still.
Yeah,
it's fairly likely that we wouldn't have dropped.
I agree. I was not certain, but since we had gone through this line, which is a pretty long-term line, I was sitting here kind of waiting for a move up and hitting this, because that would be in the Fibonacci range, right? Mm-hmm. That's the top of the range that I was expecting to see, because we had a confirmation here, we had another one, and we were going back up again. We had FTX happen, and then we cracked below it. So currently we're 20. It was 45, 45, and then now 28. So if we go all the way down that I was talking about, we get to 40 at least. No, I don't. We need less money to move to make this happen. The market cap is much lower now than it was at these points, right? So if you could look at your chart and look at the market cap of Bitcoin from here to here, and then from here to here, and now this to this, you would probably see that you need so much less money to be taken out, to be sold off, to get a big move down.
Yeah.
For at least for the market to make an impact, longs and shorts. I don't know. I haven't looked at the longs and shorts of the on Bitcoin for a while.
I find, let's see.
But yeah, I don't know. I just have this feeling that we're going to see at least a wick down below to the golden pocket.
I think it just seems likely at this point. There's no, I don't see where's the bullish bias going to come from. And yeah, although I'm perfectly expecting that we could see a pretty sizable relief rally. What percentage are we talking from here? 10, 15, maybe 20%?
You're talking about from here and up?
Yeah. Realistically, are we going to go more than, say, 30% up to the orange?
Well, to get up to it's 10% to get to the crossing, right? To where it's going to be 3.
So how much to get up to the next fib level?
To the next fib level, that would be 47%.
47%.
To the line, if we're going to go straight up.
30%.
Let's call it 25%, something like that, because it's not going to go that fast. I don't think it'll be one of those.
So anybody looking at charts really isn't looking much beyond that.
Yeah, no.
Because to expect it's going to just turn around and pop back up to 30, 35, 40,000.
Yeah.
We need to see some movements up first. So we need to see it break that line and retest really before expecting it to continue up in any sort of meaningful direction.
Yeah.
And it doesn't feel like it's coming. I think within the next sort of month or two, maybe things could change if this has a nice, comfortable continuation higher.
Mm-hmm.
Comes to that middle yellow line you have drawn and goes, okay, yeah, we're gonna push.
Then in short term, yeah.
Yeah, and maybe spend a week or so around that level. Then yeah, maybe that's when to start thinking about bullishness. But this chart right now, no.
Yeah, no.
it's just
for
until
me,
it says otherwise. No.
I don't want to think bullish until this long-term trend line is pushed through. I mean, and it's like
but
I said,
at the same time, we've seen movements where it could break that yellow line. The entire market has a good quarter, and Bitcoin in particular just starts to, I would expect the altcoins to lag and Bitcoin to go on some sort of run on its own.
Yeah.
Maybe it does something really stupid, goes up to 40k.
Yeah.
I'd still expect it to roll back below 30 down the line. So it's just not a reason to get super excited.
Yeah. I mean, looking back here,
yeah.
If we look at this, the reason to why I really I feel like if we do the same kind of trend line, like that, basically.
Yeah.
Or even if you want to be a little bit more, have a secondary, something.
See
like
that one, yeah.
But it still connects at the same spot, right? So even if you
it's still but that was the size of that candle.
Yeah.
But by the way, you know that purchase, I don't know if you know, it was around $100 million pushed the price of Bitcoin up 20% that day. That was it.
Yeah. That's the thing.
Now we need $1 billion.
Somebody decided, oh, market is done. Bear market's over. Boom. Made one big purchase, right? But what I'm trying to say here is, let's see. I don't think I don't have the right charts here, but
no, you need to go on to any other than Binance, really.
Let's see if this works. I don't think this works. Oh, maybe it does. Like it kind of works, just as a small example. Maybe possibly better to go weekly close.
There's a low just before the Binance chart starts that would be.
Oh, is it? Okay, hold on. Let me go to the BLX then. Oh, here are some old lines that I don't want. So, see, that line is still there. So, if I do are we all the way down here?
Well, just
not so sure about that.
Well, I don't know.
We can close. Yeah, it's probably not right. Either way, we had this is like an exponential move.
Fibonacci's were really good all the way up in 2017 for calling pullbacks. If you do low to high each time, it gives you a really good buy entry.
Yeah.
But a bit of a different market nowadays.
Yeah.
Although if you averaged in at each of the fib levels that over the course of this year, then you'd have.
You'd
have done all right.
Yeah, no. So what I was trying to like say before is that if you, with the whole fib level thing, if you would have bought every time it went under a new fib level, so I did a test run here. I put some words down on paper. So if you would have seen this happen and you pulled the fib level from where we pulled it, which is where you should put it, right?
Mm-hmm.
At least if you do, you can do two of them. You can do the wick one and you can do the weekly close. But when you do weekly, I think you and I can both say that we'd rather put it at the weekly close than the wicks. It's a bit stronger because that's the decided price at the time. But so if you would have gotten ready to buy under each fib level, and let's say you bought once a week, $1,000 once a week, you put 1, 2, 3, 4 buys here, so it's 4. Then for the next one, you buy twice as many times, so 8 times, because you want to layer in with more, so you get the cost basis down, right? So you wouldn't have bought here because this is just a big crash down. So you would have bought at this level. So one.
You may have bought once because you expect that fib level to be some sort of support.
Yeah, sure.
But so you'd have a buy, and then
and then you would buy 7 times more here. So 1, 2, 3, 4, 5, 6, 7, right? So you're buying below, and it's all wicks, all of them, right? And at that point, your cost basis, if you bought 4 times here and twice as many here, where the price is basically half price, your cost basis is like somewhere around here, like 24, 25K suddenly, or even less. And I think I did some calculations. If this goes down and you buy 16 times at 13.5, so like the middle line between the golden pocket, if you did, or you spent 16 times as much per buy, or whatever, So you do
if
4,
if you
8,
DCA more,
16,
twice as
yeah.
heavily, yeah.
Yeah, so that would, let me see if I have the number here. I believe I put it into like a random part of my my Google Docs. So if you bought at 35K, which is kind of like here, and you bought 4 times, and you spent $1,000 each time, you would have had 0.1144 BTC, right? And if you bought 8 times down here, you would have gained 0.428 BTC if you spent $1,000 each time. And if it goes down here, at this point, after that, you would have had an average cost basis of $22,124, and you would have had, 0.545 BTC with an average buy-in of $22,000, right? But if you also spend 16K down here, right?
Yeah.
You would have spent 28,000 total. So 16K, 8K, and then 4K. So that's 28K, right?
Yeah.
That would have given you, for 28K, you would have had 1.7264 BTC at an average of 16,218.
It's not bad for a bear market, isn't it? Using just a dumb strategy.
No. Yeah,
just straight dumb strategy.
The simplest strategy. Just
Yeah.
you pull the trend line, you're careful, you look at the fib levels, boom, 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 and the layering in harder the further down it goes. This is not something you should be doing on an altcoin or a Dogecoin or whatever a meme coin. Like the only thing I would ever buy in a bear
it's a
market
long-term
I've learned
investment.
is BTC. It's BTC.
Yeah.
It's the only thing I can think of. Maybe you can do it for like Tesla stock and whatever as well. But
Apple, Microsoft, NASDAQ, yeah, you could do it.
Yeah, Google.
Anything you wanted to. I'd say just if you have
Not financial advice.
Of course not.
Let me do that with a big face. Hold on. Not financial advice. but genuinely, it's a good way to layer it in.
It's a known investment method.
Yeah.
So
I mean, if we pulled these type of levels for the next time BTC goes into when the world goes into like a recession level bear market type thing, I'm sure this fib level wick hunting would actually be fairly good. Who knows?
You'd hope so.
Yeah. Well, you could always pull out the strategy, and then you could look at it when it happens and be like, okay.
Well, it worked in previous bear markets as well. It works on multiple assets. It's just a reliable price target. It's just a method of providing a price target to people, and they clearly have some power because they regularly are used as support levels, which is just simply a place where the buyers collectively decide here's an agreeable place to buy something.
Yeah.
And so it works. It's a self-fulfilling prophecy. And
that's why TA works, right?
Yeah.
That's the whole point of TA. And I mean, if you're somebody who's watching right now and is fairly new to TA, TA is actually, I'm going to make a video about this later on, but TA in essence, it doesn't tell you if something is a good investment or not. It only tells you if it's a good or bad time to get into the market. That's it. That's the only thing it can tell you. You can look at, it doesn't matter what asset you're looking at.
Well,
the only thing you're going to get out of it, doing good technical analysis, is this a good moment or good point in time to get in?
Is the probability of a favorable outcome?
Yeah,
there,
exactly.
And according to a bunch of battle-tested and reliable indicators that have shown to work more often than they don't work.
Yeah. It's I've seen so many people that just use TA, and they look at maybe a trader for like a short-term thing when you're looking at like some type of shitcoin or whatever, and you're looking at TA only, and you're seeing, okay, it's about to break out of this thing and it might explode up from here. If you put in like $100 and in the hopes, hoping that, and the probability of it going up exponentially after that point, if that type of TA is done at that point, it might be good it might be okay to like get into like a crappy coin and get 200x 200%.
200%. Yeah, make some
200%.
gains.
You sell it and you go over and you put it into something good like Bitcoin or oil or whatever. Right now, oil is
Something
pretty
good
low.
like oil. Don't no.
No, you know what I'm saying.
No, yeah,
I'm just being
it's
funny
anyway.
here. Oh yeah, we're still seeing the whole week right now. It's still down really hard on the SPX that we looked on earlier.
Yes.
But hey, actually, look at this. I didn't open the. This is the weekly chart with the Bollinger Band on. If this bounces here, I mean, we have some kind of.
Let's show the
The
screen.
Bollinger Band is actually going. Oh shit! Sorry. There you go. Look.
Yeah.
We actually have a. If it bounces here, then great.
Yeah. What's interesting
is evening out. What about the
what's
super
interesting
trend?
is the DXY has carried on going down as well. So
yeah, look at the super trend. The super trend needs to crack all the way up at 4.2k. But
yeah, that'll come down over the course of some weeks, though. Won't it?
That's the weekly. If we go on the daily, it's going to be See, it's a completely different story. So we have some support. We have a Bollinger Band weekly bounce somewhere around here, and we have a nearby. We have a the daily
super trend.
Yeah, but then again, the Bollinger Band is now below it, and it's closed 3 candles. It's going to close 3 candles, so we might see just dwindling down here. I don't know. We'll have to see. I mean, the SPX is a good. It's funny how I use the SPX as an indicator for Bitcoin.
It is an
index.
It is an indicator for Bitcoin until it isn't, and this is. I think that this is something that people come in, and it's a lesson to learn as early as possible. Is that everyone will talk about correlation and how Bitcoin, the dollar's going up, therefore Bitcoin's going to go down. Well, we've seen the dollar go down, Bitcoin hasn't gone up. Why? Because of fundamental events. So that thing that everyone's been waiting for, that as soon as the dollar reverses, that's it, Bitcoin will go on a rally. No, doesn't have to happen at all. And similarly, the other way can happen, where the dollar could start to rally again. Other stuff has kind of started to break, and say there's a not so small nation starts having a currency collapse, and you start to see movement into Bitcoin, and it's just that there'll be this collective point of point of critical mass where enough people will go, oh, like damn, we need to be out of our own currency, and enough people will go, Bitcoin is the best alternative. And because if Bitcoin's now at these much lower valuations, where do people think the return is over a 5 or 10 year period? If you've got a currency losing 15, 20, 25, 30% a year to inflation, do you expect Bitcoin to lose 30% a year for the next 4 years, 5 years? I don't think anybody does.
No.
It's just not a probable scenario. And so there will be a complete and total flight out of those currencies. And Bitcoin will capture some of that valuation.
I think there's only one person who thinks that.
Peter Schiff.
Yes. I mean, he's like the best poster boy for BTC.
Jim Cramer said sell. It's not a bad time to sell onto drop a losing trade, or something like that. He said.
Hey,
so as the count, so the Jim Cramer counter signal says it's time to buy.
Yeah, who knows? It's very hard for me. I can sit here and do all this TA, and I can look at the macro and the fundamentals, and we can discuss this all day. The reality of the situation is that we have no idea if it's going to go up or down from here.
No, let's just sit and Matthew McConaughey it. Fugazi.
Yeah, I don't know. It's just
It is no, it is. Nobody has a clue. Nobody has a clue, and
Yeah.
it's going to go down until there aren't enough sellers for the amount of buyers there are. The buyers are going to appear when they're less fearful and go, has everything calmed down?
Yeah.
Do we maybe want to start buying some of these cheap things right now? And right now, it's things are not calm. That things in the global markets aren't calm. Energy
Yeah.
markets aren't calm. Everything is on
Everything's
the
bad.
brink of something bad. So why we
Yeah.
should expect,
And
which is
on top of that, we have a looming recession that might come in.
well,
Like,
the recession is here, isn't it?
well,
The
yeah,
recession's been building.
It's not been officially announced, which means, and as far as I've understood it, I haven't. I'll be honest, I haven't really looked into it as much as maybe I should have. That usually when the recession hits, that's when like SPX and no, not on the day, but around that time is when the market starts turning around because it's already had its downtrend and it's waiting for that recession to hit to get in again, right? And that's kind of what I'm waiting for too. And it looks to me like if it's looming now and maybe it's 2 months away. 2 months away, that brings us to January, February. Let's call it Feb. That brings us to right around here. Oh, damn it. I forgot to click the thing. It brings us to right around here. And that's in the range that I've been looking at. And that's why I'm saying we might go here, dip down, hit that, and then go. Who knows? Like
I think
I don't know.
the thing to think about in terms of usually, right? So usually, you say when the recession hits, the market starts to bottom. In 2008, that wasn't really so. The stock market had a big old collapse. Well into it didn't bottom until it didn't bottom until the beginning of 2009. You've got these shorter recessions, the COVID crash, the dot-com bubble. So this is the Dow Jones. So the larger stocks, the Dow Jones didn't really get hit too hard by the dot-com because it wasn't, it's the same reason that you've got bigger companies. It's still 35%, which is a lot, obviously, but compared to the dot-com.
Just to clarify your chart right now for people watching, the green there is the recession. Yeah,
so these are US recessions, Yeah. So you can go back and fairly typically, yes, you get the recession, and then a few quarters later, that's when the market bottoms, and because the worst has already been priced in, the recession lives out its life. It's done. There has obviously been some exceptions. The Great Depression, of course, being one. Now, is this something that can happen again? It's certainly possible if things are that bad. And I think the thing that people do need to be aware of is that what's happened to these crypto exchanges, these bank runs. Crypto exchanges are supposed to have every coin that is deposited to them, and clearly some bad actors weren't meeting their obligations in storing their customers' coins. It's been something that has been accused of happening for years, and here we are. It's happened. We know without a shadow of a doubt, 100%, that banks don't even have the majority of the money that we think we have with them.
Because fractional reserve banking.
So if we see a bank run, which the bank runs you've seen them starting to happen in China. They could start happening in multiple countries, and I'm sure they are happening in multiple countries. And at that point, there's you're either getting into capital controls or you're getting into massive amounts of quantitative easing to meet the cash demands of those customers. Which is a direct hyperinflationary event. And in that sort of scenario, the stock market doesn't necessarily have to go down, but in terms of the purchasing power, it does what happened in the Great Depression, where we didn't have that money printing mechanism to hand out to the banks digitally with a few clicks of a few buttons.
Yeah.
And so all roads lead to Bitcoin. Either we get a crash like this and the currencies end up having to inflate away in order to meet the obligations of depositors, which is essentially a load of cash that doesn't exist, or the markets, everything crashes, and in which case we go, out of the ashes, where do we want to build our trust?
Yeah, for sure. I mean, so I'm going to open up the Fed funds right now, just for the sake of looking at what we looked at a while back, Rob.
Yeah.
This trend line is cracked, obviously, but it's not as important anymore. But basically, we've been raising rates, right? And we've ended up, you have this thing happening, and then you have, oops, it's too much, and then you bomb down back down, right? With the interest rate. Same thing here, and now we're having it, and now it's going up. I think it's faster than any time before. I think they have a much faster one here back in the 80s, but essentially on the 13th, which is, let's see, what does it say? On the 13th, which is in 2 days, on Tuesday, there is speculation that they were going to raise it with 50 basis points rather than 75 that they've done every month for the past year, basically, since March, I believe. We mentioned this before too. And if we get that slowing down of the interest rates, with the rate hikes, we're going to start seeing kind of a topping happening here. And as soon as they stop raising it, like they did here back in 06, 07, where they held it for a while with a flat top, we had the same thing happening in 2019, and the same thing here in like 01,
2000,
and they've been saying
add on the recessions to that chart.
Let's see,
indicators, US recessions.
Nope.
With the US space recessions.
Top one, I suppose.
Yeah.
Okay, so here we go. So this is what happens. Where they notice, it's like here, they notice, oh, this is a bit too much. We need to start going down, and they start going down, and then the recession hits. Boom. Same thing here. Boom.
Yeah.
Same thing here. Boom. Every single time. And obviously this one was so short because it was, the COVID thing. But they were already raising the rates, right? But if we zoom in a lot here, we're going to see the same thing happen again. And now that they're saying that they're 50 basis points is priced in at this point, right?
50 is the new 75.
Yeah, exactly. And if they still go 75, the markets are going to go, right? If they do 50, it's priced in, nothing's going to happen. If they do 25, market's going to go up. But I can't see that happening, honestly, because they've been talking about slowly. They haven't really been talking about slowly going over. What they've been doing is they've said that once they get to the point where they want to be, because when the CPI number comes in, and if it goes to, I think 7.1, I think 7.2 is what they're expecting. If it hits that on the money, or even down to 7 or 7.1, the 50 basis points is probably going to happen, most likely. But then they're going to hold it there. I think they're going to hold it for as long as they can at that level to get the inflation down. And once they're down at 2% or 3% or whatever they said they want it to be, that's when they're going to start pivoting down.
The thing is, inflation's going to come down whether or not they like it at this point. And what they've done is massively over tightened to a point where they because these rate hikes come in and they hit with a lag, a 6 to 9 month lag, then what are you laughing at?
Plippy is being mean to you in the comments section. Hey, Plippy, because
you know what? I'm
he's
going to
just
turn
jealous.
it on just for that. I'm going to turn it on just to annoy him.
Hey, we're all
Fool.
bald. We're wise old men. That means we get to have bald spots and bald glare.
I get to stroke my beard.
And I don't have any. Yeah. So, but yes, what I'm saying is, like I said, I can definitely see us holding the level for a while, right? I can see us holding this level for even to the end of the year if they really want to.
I don't think they have that much time.
I don't think they have that much time to, but I think that's what they want to do.
I think that when CPI gets below, so what is it currently, 3.78 there?
Yeah, that's the Fed funds.
I would expect to see CPI below 4 for sure within 6 months. Yeah. Whether that's permanently, temporarily, I think there's going to be waves of inflation, and so if once the CPI drops below that value, they should really be looking to lower rates as much as needed, maybe keeping them at or below what the CPI is, because they won't need to. If CPI is at 3, why would the Fed funds be at 4.5? It's not going to be. So no. I think there's a matter of time before I think they will cut accordingly, and they've still done too much too quick.
Yeah,
the market is going to overshoot, and I would expect inflation to head pretty much towards zero. Towards it very rapidly, and that's something that we've seen happen in the past. Inflation collapses in recessionary periods.
Let's see, I have USC CPI, which is core CPI.
Yeah. So if we go back,
this is what we're looking at right now.
Yeah,
it's not very. It goes back to the early 60s, or late 60s. But here's for the recessions as well. Like, this is not a small move.
No. And it's clearly so far above mean. It's so far away from the mean. At some point, we have to get some mean reversion.
Yeah, the mean. I think the mean line would be somewhere in the middle of this if you want to go to like an average, right? So like somewhere around there. But I think their goal, they were talking about having it at 2, but they're not talking about core CPI at this point. They're talking about just the consumer price index, just the pure.
Core is lower, isn't it? So
yeah, it's lower. But I couldn't find the other one. But essentially, if you want to mean revert back to something, let's put it at 1.5 maybe. Something like that. That's somewhere around the average here. If it goes down there, like, that's gonna go down so fast at this point.
Yeah, similar to periods in the 70s.
Yeah,
where just as quickly as it goes up, it can go down just as fast, because the price of the majority of things is currently at or below what it was a year ago.
Yeah.
And so year over year, inflation it's going to show up being 0 by about April.
Yeah.
That's there's going to be some things that linger, so I would expect, yes, there may be a couple of % of lingering sticky inflation, but for the majority of things, year over year, it will be negligibly low.
Yeah. So Plippy just said, I think it also depends on other factors that happen in the world. For example, if the war stops in Russia, in the Ukraine, things could start easing up, but who knows? But yes, and we've been talking about this for the past 30 minutes. Probably.
If the war, if there's a ceasefire that's held, then yes, that could bring a bit of exuberance into the markets. And is that likely? I think my expectation is that this is going to be a years-long lingering war that isn't going to get solved by any side anytime soon, and so eventually the market just discounts it. Of course, we can hope that there's some sort of peace reached. I wouldn't be super optimistic about it. I don't see any movements towards that by any parties, but who knows?
Yeah, and it sucks that this is like, it's 2022 and people are still fighting about stuff like this. It's just it's so unnecessary. Like, all I can see is just I don't. Either way, I don't want to get into politics and all that, but no, it's just imagine. I know a politician in Sweden once said the world would look a lot different if people were throwing meatballs at each other instead of rocks. And I'm like, yeah.
So I can give it a go. Well,
I like meatballs.
Yeah, meatball fight. We'll take it.
Maybe we can set that up on the first Crypto Talks event. That
meatball fight. Okay.
Meatball fight between the winner takes home 1 BTC.
What the hell? you confront that one.
I mean, if things go the way we hope it will with this channel, with everybody joining in and talking and hanging out, yeah, why not? Right?
Okay, Rob would eat them all. Yes, I would. You're right.
No, you wouldn't, because I'd eat some of them too. Like I said, I like meatballs. I'm Swedish. I need to like meatballs. Swedish people like 3 things, right? Number 1, tobacco, snus, yeah. Number 2, meatballs. And number 3, waiting for the bus standing 2 meters away from each other. You've seen the pictures.
I wouldn't have gone with that as the most favorite thing of all, but no. Yeah, sure.
No, not really. Oh, let's see. So yeah, I don't know, Rob, about you, but I.
It's just looking back to that chart, looking at this, I think, right, the dollar can go higher.
Yeah,
sure.
I mean, look at this. I actually saw Ben Cohen was talking about this top right here, and he pulled a range. I believe it was from here to this bottom right here, and he pulled it all the way back like this. Yeah. And he said, look, what happened back here was we had a huge rally up, then we had a recession thing happen, right? Come down, we hit the bottom, and then the dollar kept moving up again. Then it bounced on that level, and it kept going up all the way to 165, which is absolutely stunning. But then we had this big crash, right? But if you're looking at the same range right now, like, we go up, we go down. Are we going to go up from there? It's possible. Is it plausible?
I probably is, yes, because there's on a ongoing basis in an inflationary period, globally inflationary period, which fiat currency will be the one that you'd want to own?
Oh, it's dollar. It's always going to be dollar.
It's the dollar. And so as economies move and as economies get weaker into this recession, as currencies struggle into this recession, as inflation hangs around and lingers and really starts to have, will have long-lasting generational effects of what's going to happen over the coming years. And each of those waves of things just getting worse economically for some people, for some countries, will drive continuous valuation into the dollar. And this notion that the dollar's going to zero is quite it's a mostly American phenomenon that I think people in the US don't realize how much people outside of the US rely on the dollar, and how globally there is such this continuous underlying bid for the dollar. And the likes of China, Russia, they can't do anything about that. There might be things, yes, okay, Russia may sell oil in rubles, China may deal more in yuan, but do those countries really trust rubles and yuan more than the dollar? No,
probably not.
They just don't. They simply don't. So yes, although some trade may move in to those currencies, and people will divest away from just dollars into maybe other currencies if it's necessary, if it's needed. I think there'll be a rise over the years of people using stablecoins, and
Oh yeah,
it will be perfectly normal for banks to just be transferring stablecoins to each other because, well, it's an IOU of $1, and at least we know that dollar exists a hell of a lot more than the euro dollars they've been transferring to each other for years.
Oh yeah, for sure. And I honestly, I don't really see any stable coins. I mean, maybe there will be stable coins that, I mean, we have USDT, we have USDC, we have the PAX, BUSD, which is the same as PAX, but whatever. But we don't really see a euro pegged stable coin. Maybe we'll see that in the future. That is more widely used.
Yeah, there is one.
There are True Euro. I think it's called TEUR, but it's not used as much. Because the dollar is the world reserve currency. People peg everything to the dollar. It's just the way it is. A lot of people will. I mean, there is a TGBP as well, I believe.
Yeah.
And it's like, are people are still going to use the dollar because every exchange has pairs with USDC or USDT. There are not many pairings with the euro. There's not many pairings with the GBP. It's just, that's just the way it starts off. Maybe in the future we'll have all the pairs for any stablecoin, possibly. I don't see why.
Most likely there'll be CBDC pairs.
Yeah, and we've had the discussion about CBDCs 1,000 times. I hate it because it goes against everything that I like about BTC, basically.
But it's not BTC. It's not trying to be BTC.
No, I know.
It's trying to be its own thing, which whether or not you want to be, we can get there's the dystopian option whereby yes, it's this device used to track and trace and mark our every movements, and my counterpoint to that is, well, they can already do that with the existing financial system, so that alone isn't a reason to do it.
But at least at this point, it's not programmable in the same way.
No, and again, it depends on what programmable ends up meaning. I think there's a lot. You can choose this again. You can choose the dystopian view that they're going to, make your money disappear, lock you out of your accounts if you go against the will of the mighty government. There's there's those kind of options, and perhaps you see that maybe become a reality in there's what we see it in China. There's a certain level of that already happening. Where it ends up, who knows? Eventually, governments will overstep, and either they go really dystopian with it, and at some point we've had enough, and we end up rioting and viva la revolution, or alternatively, and I think far more likely, is they are somewhat pragmatic with what they can and can't do with this technology. They'll be very cautious with how they use it, and generally there's an awful lot of data mining stuff that will inevitably happen with it. That's going to happen with Bitcoin, because Bitcoin is a public ledger and there is data mining going on it. So as a tool to be used, nobody really cares about what you personally, I think, are doing. And a lot of the value of this data is in big data. It's in trends amongst ages, demographics, earning potential, home ownership. There's just a huge amount of data to gather on how the economy is really working.
Yeah, okay,
and
but
there's value in that. There's undeniable economic value within that data.
Sure, but look, so what they've done, as far as I've understood, in China, where they're testing the CBDC, is that they've put a limit to how long you can keep your money in your account until it disappears.
Yeah.
That is insanity, in my opinion. It's like they're
Um,
forcing you to spend, which I guess is good for like liquidity in the markets. But what if you want to save, or what if you want
then
to?
so is that you have to think this is currently a trial run of a single thing. Now,
Mhm.
so that is a particularly dystopian feature if that was implemented across the board, where every time you got paid, you had 30 days to spend it or 90 days to
Yes.
spend it. No, that's simply not going to fly. However, is that how all money is going to be? Is there going to be certain money that has certain stipulations for certain reasons, whether it's bonuses or, I don't know. It's quite clear to me that there will be some sort of incentivization where the government will put extra money into your account for behaving in a certain way, and that money may have a time limit on it. That may be completely separate from the money that you get paid monthly
Maybe.
via a thing. So that's so that's what I mean. As in, we know that there's dystopian potential with this technology. That doesn't mean it's going to be so.
No.
There's dystopian potential in a whole host of technologies. We could have the same conversation about AI.
Oh yeah.
So
I think people just react to the risk. If they can see that there's some type of risk there, it's going to hurt. And I just want to say hi to Paul Ross because he just joined the chat. Hi,
Hello.
Paul. And yes, we are nerds, so you're not wrong. How are you? Are you also a nerd? But yeah, look, it's not about me thinking that CBDCs will be this super dystopian thing where everything is like they're forcing everyone to spend all their money. You can't save anything. But the option for that is there, and if something is there, the risk of that happening might be small, but it's there. It's like, would you, do you parachute, by the way?
I do not parachute.
Why? Because there's the risk that it doesn't work and you die.
No.
Or is it just you haven't gotten around to do it?
I have a very good friend who's a parachute instructor who would love me to go and visit him and go parachuting with him. It's just not something I've ever done.
But you see the argument too, right? You see the point of the argument is the same. It's like if it's dangerous to drive a car, but people do it anyway. But there's risk. People know that.
Yeah.
You can crash. But when we have something, I want to wipe my ass with CBDCs. Yes. Okay. So we're actually discussing that right now, which is kind of funny. But and not wiping your ass with it, but and that's going to be hard because it's digital. So you'll just have to use your fingers, which is awkward. Okay, let's skip that. So what I'm saying about CBDCs, I can see the what's good with them, but when you have an option, and you and I have discussed this before, when you have an option like BTC or the current state of money and CBDCs, if you have the dollars, that's the center line, like where it's right now with fiat. On this side, you have Bitcoin, and on this side, you have CBDCs. The CBDC side means you have the same thing as here, and this gives you more liquidity and so forth, like more liquid money, but it also gives you more risk on top of what you already have. On BTC, you get, let's call it less risk, if you would use that as a world reserve currency, which will take a long time before that happens, but still. But a lot of the risk from the CBDC side and the fiat side disappears with Bitcoin. But there's also more problems that we have discussed before, which is people who want to save, people that want to save Bitcoin, the poor people, yes, maybe they can, but maybe they can't afford to save, which means they will be stuck there forever, right? However, the people that are rich can save a lot more, so we'll have the same kind of problem that we have now. And I think that's an argument that you actually put on me that I hadn't really thought about that much, but I've been thinking about it a lot more. However, even if that is the case, I feel like the upside using Bitcoin instead and getting like a hybrid thing that we've also discussed before, using a hybrid system of Austrian economics and Keynesian economics instead of using just one or the other, is probably the best solution. And maybe that's how it has to happen to get into the Austrian economic kind of viewpoint again.
If you have a system whereby there's a certain amount of credit money, fiat money, where it's you can create a credit system. You need a credit-based system in order to run an economy, and in an economy where all of the value is in this real asset, which is simply locked away and stored, that is not good for economies. It's not good for economic growth, because that money is not entering the system. That money is not stimulating the economy in any way. And if you cannot stimulate, then, well, arguably is this a healthier way for economies to run? It's an argument. However, the reality is nobody's going to risk their Bitcoin for anything less than a certain amount of expected return.
So is that true when you think of it from the Keynesian economic standpoint, or is that also true when you look at the world from the Austrian economic standpoint?
So,
because it's two different viewpoints. So if you're trying to look at Bitcoin from the viewpoint of the Keynesian economist, you see the problem with it. But if you use the basic ground view of an Austrian economist, Swedish, you get this whole, it looks better. So what I'm trying to say is that, yes, looking at Bitcoin as a world reserve currency, if you're thinking from the current economic landscape, you have these problems. But if you look at it from the Austrian economic standpoint, if we were to flip, if we could just flip a switch and go into Austrian economic, the complete market, then Bitcoin would be perfect, right? Yeah. But if at the state we're in right now, which is a Keynesian economics kind of view of the world and how the markets work, Bitcoin has an issue, which is that it's inside of the wrong economic landscape.
Yeah. Okay. So the way I see it, really, in either system, it comes down to what is the price of money. It comes to how much you can borrow money for, because ultimately, every economy has to run on borrowing and lending. If it can't, you have to have a certain amount of borrowing and lending, because if you can't borrow, if you cannot take an idea and acquire capital in order to execute that idea, then the only people who can actually invest and carry out any sort of growth are people who already have wealth. So you see, you have this concentration of wealth, and all of a sudden there's only a few people in the world who can actually buy anything, because they're the only ones that have the money to invest. And so it all comes down to how much is that the value of your money going to change on a year-on-year basis. With Keynesian money and the idea of you have this target of 2% inflation, there is an expectation that your money will lose 2% of its purchasing power per year. However, if the interest rate that you can get on your money is 3 or 4%, then all of a sudden, actually, there's an imbalance, because I'm gaining 2% of purchasing power per year. Now, that can be true in the Keynesian model. A Keynesian model can increase the money supply at a rate of 2% per year, but if they're paying you 4% in order to borrow against it, well, then that's that's how. So then the GDP of countries grows as its productivity grows and the amount of money that it also increases, but there's no real fundamental change in the value of the money, because actually the economy is growing to service. The amount of dollars is growing to service that growing economy, and it all kind of just evens out.
Sure, I can see that. What I can also see is that it's not really working like that right now.
And why? Because we've had 0% interest rates for years,
and they had that to stimulate the markets.
Well, essentially, it's distorting the price of money. You're making the price of money artificially cheap, and if money is artificially cheap, then there's an arbitrage of opportunity whereby if the money is losing value, then that assets should gain value accordingly. And so in that sense, everything becomes money. And so the response to an overly Keynesian money creating world is the monetization of hard assets, which we have seen, which basically means that those hard assets, housing, large stocks, things like Apple stock, become just as valuable as money as the actual dollars.
Right.
Because Apple stock is essentially a harder money. It's universally available. You could trade Apple stocks just as easily as dollars if you could trade, but as a store of value, as a medium of exchange.
Mm-hmm.
Like Apple stock has monetary functions, real estate has monetary functions, gold does, Bitcoin does. So it doesn't really matter what the method of storing that wealth in something scarce, some sort of Austrian money, and it just so happens that Bitcoin has been used to store a certain amount of that money. And the speculation, the assumption is that its superior monetary qualities will mean it continues to accrue a larger and larger share of the global economic pie as the bad money, as the valuation is stripped out of the bad money, that's the misbehaving money, and into better, harder, stronger money, of which Bitcoin,
such as Bitcoin, gold,
yes,
so forth, and
silver.
There's a lot of commodities as well that act, like
oil.
Yeah, I was just going to say oil.
Nickel, copper.
Copper, yeah, for sure. Lithium, platinum as well. But
land, just land, simple farmland.
Real estate.
Yeah.
Real estate is probably the strongest form of money if you can call it that. I guess you could.
Yeah.
In history, it's probably going to carry on being that because people need places to live, right? Businesses need offices.
If you can create a monopoly on the availability of land, then there's no telling how much money you can make out of it.
One of the plans that we have for Crypto Talks, you and I and our other associates, is to have real estate for Crypto Talks, right? We need to buy an office.
Yeah.
And we even talked about building Crypto Talks City in the future, which would be fun. Not sure how that's going to go, though, but we'll see. It would be very cool to have a town somewhere, like a paradise town, where everybody who works with Crypto Talks just lives for free. Pay the bills with a Bitcoin miner.
That would be nice.
That would be nice. So look, we've been doing this now for over 90 minutes, almost 100 minutes now. I'm starting to feel that we should take a, kind of take a break.
Take a break.
And come back tomorrow, hopefully, and see what we find. What's going to happen during the day, because this week is over, at least mostly. And I think that we can probably have a good next week where we can get some content out. I will do my best to try to record some educational content for everybody. Starting with, I think we're gonna start off doing the technical analysis series, right?
Yeah.
Put together some, just explain what TA is, how it works, how you should use it, how you should not use it, and what to avoid, and stuff like that. And then we'll try to make some short videos, 5-minute clips or something, explaining each indicator that we use firstly, and then go from there. Okay, bye, cool. Paul. Okay, well, cool. So we're gonna end it here, I think, unless you have something very important to say, Rob.
Love you, Phil.
I love you too. Well, okay. So we're gonna end it here, guys. Thanks for watching, and make sure you join our Discord, and because that's where all the networking happens. That's where you can hang out with us after hours, so to speak. And
also the like, subscribe, share, get it. Let's try and get as many people to watch these videos. It will, it'd be nice to get as much chat as going as possible.
Oh yeah, perfect. All right, cool. Bye, everybody. See you next time.
Bye.
I'm gonna try something.
Go on.
I'm gonna try playing our outro. It's gonna be loud, but I'll end it after that. All right. Cheers. Bye. That worked.
Hey.